Thanks a lot for joining us and taking our viewers through all of those queries today. We are going to leave it at that. But like I told you, we're in the thick of the earnings season, so lots of corporates coming through. And we have Rategain Travel Technologies, which is on our radar now. They posted a strong set of Q2 earnings. So to discuss the performance and more, we have Bhanu Chopra, Chairman and Managing Director at Rategain Travel Technologies, joining us now. Bhanu, good morning and thanks a lot for joining us. So on your revenue growth itself, I mean, it looks quite good at 47%, but we know that you have clocked in significantly higher in the past as well. Can you tell us what is the kind of revenue run rate that we should expect?
Yeah, so, as we went public, we've always guided for 30% growth, but, we've been sort of exceeding that guidance every quarter. We've basically performed north of 40%. This is on the back of, very, very strong travel demand that we see in the marketplace, right? So it's still holding quite steady and it's quite strong. I think there are, talks about, the macro level headwinds that we see in terms of recession and rising interest rates. But, in our business, we continue to see very, very strong demand. I think this is on the back of, the pent-up demand that has been existing. And we also see opening up of Asia and Europe. So we're seeing some good demand there. I think one of the other parameters for us is also the business travel, and we do GDS connectivity for that, and that's seeing some very, very robust growth as well. And if you look at, all our customers, which are the top OTAs, car rental companies, and hotel chains, they're having record Q2 earnings in terms of both revenue and profit. And given the industry now recognizes there is a larger need for digital adoption, these companies are sitting on very, very strong balance sheets now, and they want to invest in digitization. And Rategain is, at the front and center of providing and helping our customers digitize.
Bhanu, afternoon. This is Reema Tendulkar over here. You wouldn't say the peak of pent-up travel demand is behind us? Because, as my colleague was trying to get at, the revenue growth at 47% this quarter on a year-on-year basis is lower than the 50% plus revenue growth that you've enjoyed, say, in the last 3 quarters. So any signs of moderation for you? Not weakness, but moderation.
Yeah, so look, it's very, very difficult to predict how it's going to be, given the world is quite dynamic and volatile. And so, as far as I can tell in terms of what is the Q1 performance for next year as well, because we see bookings up until, the first quarter of 2023, the demand is holding quite steady and strong. And like I said, our customers who are the big OTAs and car rental companies and hotel chains, they are doing extremely well and recording record profits. You're seeing this in India as well, if you look at Indian hotels. So there is a much, much larger need for digitization, given the labor shortages, and they are looking to reinvest. So we see continued demand for our products. In fact, when we look at our pipeline also for Q3, it is very, very strong. And I'm hoping that Q3 in terms of new bookings, should be a record quarter for us.
Good. So Q3 new bookings should be at record levels. So that's good to hear. Just some numbers. What were the Q2 new contract wins, and what is the total pipeline standard right now? I think the last quarter it was about 308 crore. What would that comparable number be?
So in terms of just new wins, we were roughly around 22 crores annual contract value. But as you are aware, most of our contracts are multi-year, and the usual lifetime value is about, 10 years. In terms of the pipeline, the overall pipeline, it stands at around 315 crores. And, we are quite confident that we will have a very, very good conversion of this pipeline going into Q3. And as I've noted previously also, the second half of the year is usually a stronger part of the year for us, given, a lot of the budgeting happens at a lot of our customers during this period. So, we are quite hopeful for a lot of these decisions to happen. And so I'm hoping our H2 will be even superior than our H1.
Bhanu Chopra, thank you very much for joining in. That's Rategain for you. Very strong revenue growth, 47% increase on a year-on-year basis. The new wins have picked up on a quarter-on-quarter basis. The deal pipeline too is higher, and the company is saying H2 should be seasonally stronger, and that perhaps will result in record deal wins in the coming quarter. With that, we're out of time, but do remember to email us your queries and we'll address them with our experts. Stay tuned. Closing Bell is up next.